In the following, I'm going to show you a dilemma all traders face and what you could do about it. Here's a dilemma that all traders, whether they be day traders or even swing traders, face. What do you do when you come in after a move has started, when your entry level, had you been on your platform earlier in the day, would have been an obvious signal to go short or long? Well, here's an illustration from December 13, 2021. We'll use the Eurodollar here. I'm going to zoom this a little. Now, I'm going to use the Amazing Trader as my illustration because the signals are often very clear and the patterns they form and the strategy to use it. So if you look at here, these two, you have a double top here, you had two blue lines, you have a directional indicator. That on multiple time frames, let's even look at a 30-minute chart right here, would have given you a short position. But the question is, what do you do when you walk in and the market is 50 points below the high of the day and probably 40 points below where you would have entered the trade? That's the dilemma that almost all traders face. And I wish there was a simple answer, because markets, as most of us know, rarely operate according to a textbook formula. So here we are. We had an obvious short trade in the Eurodollar. So you have a couple of choices. You can scroll through different currencies until you find a pattern that it's still not long in the tooth. That's the first alternative. If you're sticking with one currency, then you have to make a decision whether the market's can continue on or the market's going to stop and reverse. One way of doing it, and I said the only way I know how to do it, is using the Amazing Trader. And what I would do first is I call it a drill down. I go to longer time frames. Here's a 4-hour chart. Here's a 1-hour chart. It's just got more momentum than the 4-hour chart. But then I would look, in this case, for red Amazing Trader lines, the recent lows, etc., where there might be stops. If we're not close enough to stops, that would tell me to be a little cautious. Because I'm telling you, the average trader is going to take this chart, for example, and say, I can't be short, it's gone too far, I'm going to go long. And what I'm going to say is you only go long when there's a reason to do so. And the best reason I can give you is the Amazing Trader. So let's see what happened in this case. Amazing Trader is not near any key red lines that would trigger a further push to the downside and replace the run stops. There are some other reasons I'm not going to go into right now, but now we form a directional indicator off the bottom, these two red lines. That's the first place in this whole move down, this whole 55, 40, 65 point move to the downside found. So if you're looking there to play it by a strategy we show you, you would go long. And in fact, the Amazing Trader did go long at 112.69.9 with a stop below the low of the day. So we'll come back and take a look at it. But the key point here is when you're in one of these moves and you come in, you have a dilemma. Dilemma is whether you go with the market, you don't blindly go against the market. You only go against the market if you see a reason to do so. So let's come back later. I'll show you how this trade works out. Just a quick update. Markets move through this blue line, but this level over here, which is around 112.93, is the key level, the one that had to be taken out to confirm that this move to the downside is over. So anywhere in this area here is where I'll be looking to take profit on this trade. So let's see how this trade worked out. As I indicated, we were looking to take profits somewhere in this region here. We got up almost to 112.88 off the long taken at 112.69.9 with a stop below the low of the day. In fact, that profit's been taken. And that's just proof of concept of using the Amazing Trader to trade. But the key takeaway here is the dilemma that traders face when they open their platform. They see a pattern that they would likely have traded with the flow had they been there earlier, and now faced with a situation where the move has already taken place. And they got to decide whether they want to go with it, sit it out, or go the other way. Now, going with the flow, we have a clear strategy on how to do that. Sitting it out, there's nothing wrong with sitting it out rather than just losing money, or being patient and only going the other way if you find a reason to do so. What you don't want to do is buy just because it looks low or sell just because it looks too high without having other reasons to go into that type of trade. So again, that's the dilemma that all traders face. But there's one more thing. I have one rule that I follow is when I'm going counter to an overall trend, I look to take my profits sooner rather than later, because when the market reverses, you'll get a big candle like this. As in this case, the buying ran out of steam, and there was a reason to do that. They pointed out this was the key Amazing Trader level. And unless this was taken out, the market was not in a reversal of this move to the downside. Now, how do we know how to do that? Well, all this is clearly explained, the logic, why, and how to trade it in the AT trading study guide that you get with the Amazing Trader. So that's basically the dilemma we all face. Just be aware of it so you're not buying just for the sake of buying or selling for the sake of selling, when you either could go with the flow or you could wait and be patient until you have a reason to put on your trade.